The following is a presentation of TFNN.
Good day, money masters and treasure hunters. Welcome to the December 12th terrific Thursday edition of today's Closing Bell on the Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom for this evening. For those of you not familiar with me, I'm the morning anchor here at TFNN. I kick things off each morning at 9 o'clock for the first 2 hours of the trading day. I use a set of leading indicator tools to help identify price targets, such as the AB equals CD patterns. We look at Fibonacci expansion and retracements, the Gartley and butterfly buy and sell patterns, and of course, we always look at the message of the markets that the bulls and the bears leave us with Japanese candlestick charting. I found that these tools, they just simply were not enough. So I needed more. So I went out and I built my own indicator. It's called the Rhodes Momentum Indicator. In fact, it's available on the, I'm going to be doing a workshop a week from today. Yeah, a week from today that you can sign up for on the homepage of TFNN.com. We'll talk about that a little bit later. I developed that tool, though, with one outcome in mind, and that was to put the power of what I consider to be the most advanced indicator, scanner, and trading strategy in the hands of people just like you and me. And I can promise you this. Once you learn that indicator, once you learn how to use it, you will never look at a stock chart the same way. I've got a newsletter service called Mastering Probability. It's out each morning by 8 o'clock. It covers all the markets, just as we're going to do here tonight. Now, this show, it's all about you, folks. And I absolutely treasure your presence here today. Now, my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. This is the tool I call Accelerate Your Learning Curve. You know, from birth up until about the time we're 18, our learning curve, it's just simply dramatic, and our capacity to learn, just simply staggering. We learned a tremendous amount very fast, and then things trail off. I mean, if there's no more exams to take, why read any books? Now imagine what would happen if we kept up an accelerated learning curve for our entire life. Can you imagine what we could learn? The skills we could develop, the capacities that we could have? Here's what I'm asking you to do. From this day forward, feed your mind just as you do your body. Right now, some of you are driving home from work and you're wondering what's on the dinner table or where is it that I'm going to head to. Feed your mind, folks. Feed it with good ideas wherever they can be found. Folks, make it your mission to learn one thing each day and then jot it down on a pad of paper, maybe your digital memo pad, and a year from now, you will be amazed at your newfound knowledge. Accelerate your learning curve, folks. Now let's go see what these markets were doing. They were accelerating downward. We had the Dow close off 104 points. It closed out at 15,739, down about a little over 0.6%. The S&P 500 down 6 points. It closed out at 1775.50. Composite off 5 points. It closed at 39.98. We had green. We had green out here in the market. In the Russell 2000, it was up $1.70. You had Apple down 82 cents. Microsoft up off 39 cents. Google down $7 and change. Leading the charge to the upside. You had Netflix up $9. You had Tesla Motor up around 8. Kindred Bioscience up 5. Regeneron Pharmaceuticals was up 4 to the downside. Google led the charge to the downside dollar-wise. I will tell you that Lululemon led the charge to the downside volume-wise. It was off $8. MasterCard was off 8 as well. Our call-in number is 877-927-6648. Give us a call, folks. Now, what we're going to do today is we're going to take a look at each of the different chart patterns here on different time frames. But the first chart that we're looking at, if you're watching us on Tiger TV, and thanks so much for doing that, we're looking at my favorite currency pair. It should be your favorite currency pair as well, because it's the one that points the direction of the market, and it is the Euro-Japanese yen. We talked about this here this morning. Euro-Japanese yen made we're looking at a 0.786 Gartley sell pattern. It did that right here. This is this is a 30-minute chart that we are looking at. Works the same way on all time frames out here. And we'll switch over to the daily chart because it's really important to understand, because right now you're wondering, hey, we've had the market sell down for 2 days out there. And yes, the trend is in the process of changing. Of course, it depends on what time frame it is that we're going to take a look at. But what's important here is when a 0.786 Gartley buy or sell, and this one here is a sell pattern, when it fails, it turns into a butterfly. And understanding the correlation between the Euro-Japanese yen and the U.S. stock markets is very, very important. Well, this currency pair here, it made that 0.786 Gartley sell pattern, and it worked. It made its first objective. The first objective of the A to D point was the 0.382 retracement around the 141.52 level. Guess what, folks? Right at about the time frame of about 2:30, that pattern started to fail. When that pattern fails, that leads to higher price. That means that we're likely going to see a bounce in the market tomorrow unless something happens with regard to this currency pair over the course of the next, let's see, it's 4 o'clock, over the next 15 hours or so. Of course, if you tune in tomorrow morning at 9 o'clock, we'll know exactly where this currency pair is at. Now, the reason that this is so important is because we're going to take a look at the daily chart out here. And this is the daily chart for the Euro-Japanese yen, which completed a 1 to 1.618 A to B equals CD up. It did that here a couple of days ago, did it on December the 10th, and it backed off just slightly. It's right now in the process of taking over its highs again. This thing has not backed off. This has got more energy. The correlation between this and the U.S. stock market is so amazing that it is important for us to be paying attention to. So we'll come back to it later on, but now let's go take a look at the S&P 500. Let's go see what it did today. It was down another 6 points. It actually closed below the swing point that was formed out here on November the 20th. We'll take a look at the SPYs. The question is, okay, where, if in fact, now there are times here where the correlation comes unglued, but the winner of the direction of the markets is not the markets. It's the currency pair. So when there are divergences between the Euro-Japanese yen, if it's going one way and the markets are going the other way, it may not tell you when, but it does tell you who's going to win that battle, and it is going to be the currency pair that wins that battle. Now, if we take a look at different retracement levels of where it is that we can identify, because there's an A to B equals CD down, a very small one in the daily chart for the S&P 500. We can take a look at the November 29th high, come down to the little doji candle that was formed on December 4th, little retracement up to December 9th. We'll see here that right around 1767 is our 1 to 1.272 A to B equals CD. So maybe price will head down there. If we take a look at retracements, just simply coming off our last swing point out here, and that would be from November 7th all the way up to the highs, you'll see that today hit the exact 0.618 retracement. 1771.93 is the exact number. What we actually saw as a price point at the low here today, 1772.28. Okay, not exact, but pretty darn close out there. So that's what was going on inside of the S&P 500. If we switch over, we take a look at the SPY. Let's use the SPY to gauge our volume out here. And if we take a look at that, yesterday you had volume of 130 million shares to the downside. Today, your volume was 110. So it's lightening up versus picking up on the way down. It traded into the candlestick that has 100 million from November the 13th out there. So volume, it's not as if we've seen the markets fall apart. At least not yet. We have certainly not seen it with regard to volume. Did volume accelerate? Did it pass a B point? Or did it really pass a swing point, I should say, which is really December the 4th out there with volume? Well, that had 123 million shares. And today it was down with 110 million shares. So the answer there is no, it did not. No, it did not. Let's go take a look at the Dow, because the Dow is a bit weaker out here. The Dow was down 104 points today. Let's go check out and see where it was trading into, where its pattern takes us to. The 1-to-1 A to B equals CD down. That would start with the swing point that took place on Friday right after Thanksgiving, after we went ahead and had some nice meals, right? Made a high out there on November 29th up at the 16,174 and a bit of change. That was your A point. Your B point took place here December 4th. Big wide-ranging bar that took place after that Jobs Friday out there. Took 1 day to pause and move a bit higher. That's your C point December 9th. That's the price level 16,058. Your 1-to-1 A to B equals CD. That takes us to 15,675. The low today was 15,703. So when you take a look in perspective with regard to the market and what it has done out here on a daily chart, still not a ton of damage. If we go take a look at the ETF structure and gauge that from the volume standpoint here, inside the Dow Diamonds today, the DIA, that was down with volume of about 7 million shares. Yesterday, it had volume of 7.9 million shares. It's going into volume of about 5 million shares out there. It also did, now look, what it did do, it closed inside the November 7th swing point. That was a key reversal session. That had volume of 10 million shares. So it's even coming into that area of what should have held that support. Did hold the support, the top of which is 157.80. It closed inside that. Okay, so it goes ahead and it completes its A to B equals CD down. That A point being the the November 29th high, the B point being the low on December 4th, the C point being on December 9th. 1-to-1 takes you to 156.81 so far today. Where it got down to was 157.07. The Dow off 104. S&P's down 7. We'll be right back, folks.